In this video, we'll be taking a look at gold, US 100, which is Nasdaq, USD-JPY, EUR-USD, GB-USD, and BTC USD. So most of these charts we'll be discussing today were charts requested by our community members on Discord. If you aren't part of our Discord community, use the link in the description below to join our Discord. It's totally free. Without further ado, starting with the gold chart on the 2 hours time frame. So on the 2 hours time frame, gold seems to be really bullish, right? We've got price creating higher highs, higher lows. That's what the market structure shows us, and I think it's quite obvious that the next possible trade opportunity will be to go long, right? So I went long on Friday. I'm currently in a long position on this trade, right? My stop loss is currently around these price levels, and I'm aiming for the higher band of this symmetrical triangle. So I took the lows of the current higher highs and higher lows, so over here, and I took the most recent swing highs, right, which is what we have over here. So this gives us a clear ascending channel, right? And I believe there's a good chance we see price going as high as the upper bounds of this channel, then possibly a reversal of the downside and continuation. So we have no idea what's going to happen in the future, but for now, I think we are primed to see gold go a bit higher, right? So with that being said, if you aren't in on this trade right now, I think the best possible price level to enter would be waiting for more consolidation. If this happens, then go long after another breakout from that consolidation. So if this happens, then your entry would want to be around the breakout of this consolidation and stop loss underneath this consolidation. So this gives you a tighter risk to reward ratio, right? So you get a 1-3, 1-4, 1-5 on this, and take profit target should be placed close to the higher bounds of the channel. You can see higher lows, higher highs. So this is a clean channel, good breakout, right, with volume. If you go to the 4 hours time frame, and we just ride this position to go higher. So this is gonna be like the easiest trade for me this week, right? Hopefully, I do believe it's gonna go as I expect, but on the downside, right? So the disadvantage to this is that we could get a pop into these highs, then get a dump, right? This is something that's likely going to happen then maybe before we go higher, right? So because we do have a good area of resistance over here. So this is the previous all-time highs on gold, so there's a good chance we get this pop into this area of resistance and we get a dump, wiping out all the positions stacked around these price levels before we eventually go higher. So something else that could happen if you want to be more aggressive, if you want to be more conservative, you could wait for something like this, right? A move into this area of resistance, get a good consolidation over here, and then a proper breakout again. So if this happens, this could present you with another opportunity to go long. So first position will be placed, position will be placed after the breakout of the area of resistance. Stop loss will be placed underneath the consolidation list of that breakout, and your take profit targets could be placed around the higher bounds of the channel. So this is another way to take advantage of this current price action on gold, right? So I'm going to zoom in, so 1 hour time frame, so we can clearly see what I'm talking about, right? So right now, I'm going to get rid of this. So if you're not currently in on gold, right? So for me, I've been in around these price levels after we got the breakout, my stop loss placed around these price levels, right? So for a more conservative approach, like I said earlier, you simply wait for a move into this area of resistance, get a good consolidation. So we're on the 1 hour time frame now, then get that breakout. So this gives you a confirmation that price is indeed going higher. Entry will be placed above the break of this area of resistance. Stop loss will be placed underneath the consolidation to the breakout. Take profit target can be placed at the higher bounds of the channel. This is how I'm going to approach trading gold for anyone who isn't in yet, but there's no guarantee that this happens because I think there's a good chance price blows through this area of resistance straight all the way to the higher bounds of this ascending channel. So that's it briefly for gold. Moving on, we're talking about US 100. So US 100 is Nasdaq, right? So Nasdaq, strong bullish trend. So 4 hours time frame as well. Strong bullish trend, price creating higher highs, higher lows. You can see the trend dates all the way back to 2025. So May of 2025, May of last year, we've been trending really hard, and right now we just formed a very good symmetrical triangle, right? So for me, when the market opens, I'm going to jump into this trade. The reason is because I'm an aggressive trader, like you all know, and I think we've had a good breakout from this symmetrical triangle. We had a flush back down and a move to the upside. So this movement over here has given me that confirmation that indeed we are pushing higher, right? So you can see the higher lows, 1, 2, 3. So it's going to be difficult for price to come put in a lower low, right, before it goes up. It happens in the market, right, but probability detects that this is likely going to go higher, right? So for me, when the market opens, I'm going to go long immediately. My stop loss will be placed underneath this price level. So it's going to be a bit wide, maybe 350 to 400 pips stop loss, as the case may be, right? So over here, you can see 400 pips SL, as the case may be, and potential take profit target for me is going to be placed around 1000 pips. So you reach the word ratio of 1 to 3, 1 to 2, decent in my opinion. And if I see more opportunities to add more positions as we climb higher, I'm going to do that. So this is the 4 hours time frame. You can clearly see area values here: lower highs 1 2 3, higher lows 1 2 3. So clear symmetrical triangle, clean breakout, high volume on 4 hours time frame, and I think we are likely going to ride this one higher. So for anyone who's skeptical, if you want to be more conservative, then you could watch out or pay attention to these price levels, because this is a very good area of resistance, right? So this is a very good area of resistance. So if you want to be more conservative, for me, I'm an aggressive trader. That's why I'm talking about going long immediately the market opens, right? Because I trade with good risk management, right? But if you want to be more conservative, you can see that we are currently trading at a clear area of resistance. So you could wait for more pullbacks. So you could wait for a pullback like this, right? More consolidation. Then when we break through this area of resistance, then that could be your confirmation to go long. You could also go as far as waiting for a retest, right? But a retest is likely not going to happen. But if it does happen, then that could be more confirmation for you, right? But if you want to go conservatively, so the best conservative approach right now will be waiting for more consolidation around this area of resistance. Entry will be placed after the breakout, then your stop loss can become tighter, right? So your stop loss can now be placed above or just underneath here, just underneath the consolidation, at least the breakout, and you can trade your positions as you go higher, aiming for your risk to ratio of 1 to 3, 1 to 4, 1 to 5, as the case may be, because this will send price to price discovery, new all-time highs on Nasdaq. For now, I don't see any reason why you want to go short. That's why I won't be wasting my time talking about the shorts positions. So even if this thing goes down, I'm not going to go short, because this looks like a solid bullish trend in my opinion. And the current price action dictates that we are likely going to go higher when the market opens, right? So I'm going to watch this closely. When the market opens, I may decide to jump in, I may decide to wait, because I'm currently on gold. But base case is waiting for a clear breakout from this area of resistance before you go long, so you can then get a tighter risk to reward ratio, right? So moving on, we're talking about USD-JPY. So USD-JPY also requested by one of our community members. You can see on the daily time frame, this looks extremely bullish. So massive bullish move to the upside, huge consolidation, good breakout from that consolidation, and another consolidation over here. So this consolidation simply signifies a bullish continuation pattern, right? And it seems we've had a breakout. So I'm going to zoom in over here on the 4 hours time frame to see what's going on here, for us to spot out trade opportunities for this week, right? So the reason I'm a bit skeptical about USD-JPY is because DXY has been moving funny in these past few weeks, right? So for now, I'm just going to show you what I think. USD JPY 4 hours time frame. So we've had a clean break of resistance, right? But I wouldn't be jumping into a long position right now, because if you go long at current price levels, then your stop loss would have to be placed around here. Right, so if you take a measured price movement, then this would mean entering here, stop loss placed here, which would be a price level to invalidate the current setup. Then you have to place a stop loss at about 170 pips, which is too wide in my opinion, right? So this looks like a clear ascending triangle. So bullish trend, bullish ascending triangle. If you've read our chart pattern playbook, which is free, then you will understand that this is a no-brainer, solid trade opportunity. And the only thing that could disrupt this setup right now is if something crazy happens to the DXY, because we have CPI results coming up this week. So you have to be careful with trading major currency pairs and gold, right? So for me, the best approach to taking this to get a tighter risk to reward ratio would be waiting for a pullback, right? A pullback into this triangle, followed by a move to the upside. So similar to what we had on a Nasdaq, right? If this happens, then this will give me a better opportunity to go long. So then I can go long when we bounce off of this reversal. Stop loss can now be placed underneath the lows before the breakout. Then you can trade your position to go higher. Your first take profit target could be as high as these price levels, not too high, of course, but the main take profit target will be placed around these other highs, right? So this gives you a better and a tighter risk to reward ratio. So if you take a major price movement, you will just be risking what? Approximately maybe 100 pips for a potential take profit of 400 pips. So risk reward ratio of 1:3, 1:4, decent, right? So this is how I'm going to approach trading USD-JPY. So another reason why I think we may get a bit of a cool off is because you can see the RSI seems to be creeping towards the overbought level. So there's a good chance we get a cool off before we go higher. So something else that could happen, right? Even if we may not get a cool off immediately right now, right? So we may see price, excuse me. So you can see we have a good area of resistance over here, right? So for a more conservative approach, for a better risk reward ratio, you could also wait for price to come into this area of resistance, consolidate around these price levels, then give us a proper breakout to the upside. This is another way to get a better risk reward ratio for this trade, right? So then this happens, then you can go long after the breakout of that small consolidation when we hit this next area of resistance, right? So remember, this is the 4 hours time frame, right? And then your stop loss can be placed underneath the consolidation that you said the breakout, and your take profit target then becomes this next area of resistance. This is exactly how I hope trading USD-JPY. In fact, I think I'm going to trade this one. Everybody knows I don't trade currency pairs. Only if they look good, that's when I make attempt to trade them. But this looks like a very good one, and I think I'm going to try as much as possible to take advantage of this setup on USD-JPY, right? So USD-JPY is extremely weak right now. That's the reason why we can see the chart defiles the the strength of the dollar, right, or the weakness of the dollar, whatever. So JPY is the major mover in this chart, in this pair. That's why you can see the bullish trend continues as the Japanese yen continues to get weaker. So that's it briefly for USD-JPY. I don't see any reason why you want to go short. Trend is bullish, structure is bullish, breakout, consolidation, then you look for opportunities to go long. So I won't be wasting time talking about a search opportunity because that would just be a no-brainer. Moving on, we're talking about EUR-USD. So EUR-USD, this one seems a bit tricky. I didn't want to review this chart because it's messy, it's not clean. Though, yeah, currently the trend looks bullish. So you can see higher highs, higher lows over here, big consolidation like this. So if you go to the daily time frame, for example, yeah, so something worth paying attention to will be, if you take these highs, you can see that we just got rejected from this area of resistance. Not very clean, right? But we have the most number of touches. So this means there's a good chance EUR-USD, there's a good chance EUR-USD comes all the way down to this trend line and then bounces up. But I don't think that's going to happen, right? But this is the daily time frame. Anything can happen. But I'm just going to go back to the lower time frame so we can focus on what's happening over here, right? So removing this, I'm going back to the 4 hours time frame, for example. What you notice is this current movement, this current bearish movement on EUR-USD. So it seems like an exhaustion move, right? Which means bears are getting tired of pushing the price downwards. That's what this means, because you can see the choppy price movement to the downside just wiping out traders who wants to go long, right? You can also see the RSI sloping towards the oversold level. So for now, the reason why I'm skeptical about talking about going long or going short is because we have no idea where price is going to get reversed. So price could equally just bounce off of this area of value and go higher, right? So I call it an area of value because we have a low here, right? We could see price bounce off of this low, go up. We could see price, right? Excuse me. We could see price consolidate a little around these price levels, then keep sliding towards the downside, touching this trend line, then bounce. So with areas right now, it is extremely difficult to tell what's going to happen, except you want to make too many assumptions, right? So for me, I'll be staying away from EUR-USD. So someone asked me to review EUR-USD, and this is my verdict. I'll be staying away from EUR-USD because the chart isn't clear enough. Right now, you can see clear pattern on gold, clear pattern on US 100, clear pattern and structure on USD-JPY, which means those chart gives you better trade opportunities to go long or go short, depending on the market direction. But for everything we just reviewed on gold, US 100 and USD-JPY, they are all bullish setups, right? So EUR-USD should also be bullish, but right now it is extremely difficult to tell And if you want to jump into a buy position here, you will just simply be guessing, because right now we are currently consolidating. So there's no clear trend around this price level. So around these price levels, right? So this is a very big consolidation, which means price could reverse at any time. It could reverse from here up. It could go down first before going higher. It could just give you this choppy movement like this and just go like this before it makes a direction. So for me, I suggest staying away from EUR-USD because the direction is currently unclear. That's it for EUR-USD. Moving on, talking about GBP-USD, similar to what we have on EUR-USD, but this one seems like we could go a little lower, right? Because we have a clear area of value here, right? So if you want to use this as an area of value, there's a good chance we come, and this is a 4 hours time frame, right? There's a good chance we come into this area of value, consolidate, and either go up or go down, right? So for me, I don't want to short GBP-USD or EUR-USD right now, right? Because I believe the DXY is going to get weaker. So if the DXY gets weaker, then I do think GBP-USD EUR-USD should go higher. But right now, the market structure is currently not showing me signs of a bullish momentum coming, right? So the only takeaway from GBP-USD will be this. If you go to the daily on GBP-USD, right, you'll notice that we've had a strong bullish trend. So you can see over here, we have price raising higher highs, higher lows. And right now, the current structure over here seems like a bullish continuation pattern. But this bullish continuation pattern will only be confirmed if we get a breakout from this area of resistance or something like this, and we get a good breakout. So this would confirm our bullish continuation pattern. But for now, it is extremely difficult to tell whether we're going to break out from this resistance level or we're going to go lower like this before maybe going higher again. So same thing with EUR-USD. I'll be staying away from GBP-USD for now till I get a clear signal, a clear pattern, or a clear indication that we're either going lower or we're going higher. Because EUR-USD, though we may see a good breakout right now from this trend line after being rejected from this area of resistance, we may get a rejection from any of these lows, right? We could come into this area of value, consolidate, and bounce higher. We could come into this other area of value, consolidate, and bounce higher. It's just not setting my opinion on RSI seems to be getting towards an oversold level when we've barely made any move, right? So for EUR-USD and GBP-USD, for me, I'll be staying away. So for my 2 committee members who requested for this chart, this is my verdict. EUR-USD, GBP-USD, I'll be staying away, especially when I have better setups on USD-JPY, on US 100, which is Nasdaq, and on gold, right? Lastly, we'll be talking about Bitcoin. So Bitcoin right now, bullish trend, but the most important thing is we've been consolidating within this ascending triangle for quite some time, right? So this is the daily time frame. So I'm going to go down to the 4 hours time frame so we can clearly see what's happening over here, right? So 4 hours time frame, you can see an ascending triangle, right? Classic. This is supposed to be a bullish chart pattern, right? Because you can see higher lows, clean area of resistance, but this has happened in a downtrend, right? So you can see the downtrend all the way from these highs, lower lows, then we have this consolidation. But on the flip side, on the daily time frame, this is a bullish trend, right? So which do you pay attention to? So do you pay attention to a breakout from area of resistance to go higher, or you pay attention to a breakout to the downside for this move on the lower time frame, right? So this is how I'm going to approach trading Bitcoin. So 4 hours time frame, I don't trade this. I'm not going to trade it, but for anyone who wants to trade BTC, I think either breakout is valid for this. If you get a good breakout, right? So if you get a good volume breakout below, then it is a valid opportunity to go short, aiming for this area of support or area of value over here at $70,000. Then we're likely going to see a bounce up to the upside, right? So this is the bearish case scenario, and bullish case scenario will be simply watching out for a good breakout from this area of resistance. If this happens, then we are likely going to see BTC continue to rally higher. So either breakout for me, I think is valid because there's a good reason why we've been consolidating for what this consolidation started since November of 2025, right? So about 3 months ago. So there's a good chance something significant is about to happen. That's why we've had this consolidation for the past 3 months. So either breakout, if we get a bearish breakout to the downside, then that should see the price of BTC going back down to about 70K or 75K as case may be. And a bullish breakout to the upside should see the price of BTC going back to at least $110,000 to $120,000. That's my verdict for Bitcoin. But I wouldn't be trading this. But for anyone who will, that's what I'll be watching out for. So a bearish breakout in this case is valid for the short-term bearish trend, and a bullish breakout is valid for the long-term bullish trend. That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you aren't one of our Discord community members yet, use the link in the description below to join our Discord. It's totally free, and you get to ask me to review any chart every week. That's it from me, guys, this week. See you next week.